Hello, chart watchers, and welcome to this Tuesday, August 28th Market Watchers live show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we got the Dow Jones Industrial Average currently up 5 points, down off the earlier high. We can see the market retreating a little bit from earlier highs. The S&P 500 has moved into negative territory, down about 2.4 points. The NASDAQ, after moving higher, setting another all-time high record, down 3.8 points. Russell 2000 underperforming today, once again, down 4.8 points. The 10-year Treasury yield is starting to rise again off of the recent lows. We held that support at about 2.81%, and we have now moved higher for the past 3 trading sessions. 10-year Treasury yield currently at 2.87%. Volatility continues to trade in a fairly narrow range. Past 3 or 4 days, it's been between about 11 3/4, 12.5, but the overall downtrend remains in play. Airlines performing pretty well today, trying to make a breakout. Most of the groups were kind of in a fairly narrow range, most of the industry groups, but airlines were doing well. Aluminum was doing well earlier, but you can see after having a false breakout, we have reversed here. Interesting seasonality numbers on aluminum I'll talk about in a little while. The life insurance group, I'm watching 800 very closely. This group is only down a couple points, no big deal from a percentage perspective, but a reversal at a key area of resistance should be noteworthy. Banks also struggling right as we get to a key area of resistance. One stock out with some earnings today, market not really liking it so far. Best Buy down 6%, a little bit more than 6%. And then finally, Qualcomm. Qualcomm had come back or talked a little bit about their results from their Dutch auction that they had. That was part of their repurchase agreement of many shares. So they just gave some preliminary results, and that has been enough to shoot the stock back up above multi-year price resistance. This is big news for Qualcomm technically. You can see the volume has been very strong the past couple of weeks on this move up. I think Qualcomm is starting perhaps a major move to the upside. Okay, Aaron, it's Tuesday. We got our second, we're into our second day of the trading week. How are you doing today?
I'm doing very well. Thank you very much. A beautiful day sizing up here in SoCal.
Yeah, it's been a little warmer again. We're starting to heat up. I'm hoping for good weather in Charlottesville, Virginia this Saturday for my daughter's wedding. I think as of a couple of days ago, the high was supposed to be around 82, which is pretty nice. And I also looked into the Atlantic. Those of you who live on the East Coast know as we move into September, not only do we move into the bearish month for the stock market, but we also move into hurricane month for the East Coast.
Oh, that's true.
I wanted to keep an eye on that because it takes a while for hurricanes to develop and actually come all the way back up and perhaps threaten the East Coast. But so far, it looks pretty good there. So I'm getting excited as the weekend approaches.
Oh, I am sure, as is your daughter, I am sure. Going crazy right now. I remember the week before the wedding.
Yes, it's very exciting. First one of my kids to get married. So this is a special weekend for sure.
Oh, very excited for you all. All right, well, we might as well get ready here and go through what's happening this week. Tomorrow, my dad will be in, Carl Swenlin. And then because of that wedding, Thursday and Friday, Julius de Kempener will be joining me as a guest co-host. And then, of course, Monday will be no market watchers since the market will be closed for Labor Day. And then finally, when we get back from Labor Day weekend, I'll be giving you the decision point review for the month. So you can see all of those monthly charts that will have just gone final. Today, though, what are we going to be covering? Well, first off, after our technical news, Tom's going to take it away and give us the September seasonality report. So we'll know what to expect going into September in more detail. McDonald's will be our first symbol. And finally, we'll finish it up with Watchlist, where Tom and I will give you a peek into what we're watching right now as far as stocks go. All right, Tom, let's go ahead and get this started. Time for some technical news.
All right, let's take a look. First, we'll start off with the 10-year Treasury yield. And what I did here before we get into the economic news is I just kind of wanted to illustrate what happens when you get a chart, whether it's the Treasury yield, whether it's Apple, whether it's an index, whether it's an ETF, whatever. When you go sideways for a while, there are some things that just don't really provide a whole lot of clues. I'm a moving average follower. You know, I like to follow the PPO. But notice over the past 2 to 3 months, as we've been consolidating on the 10-year Treasury yield, normally a bearish crossover, the PPO is noteworthy, I should say. You can see 3 of these on the chart over the past 3 months. 2 of them negative, where we went from positive PPO to negative PPO, and then 1 positive. Yet when you look at the chart, we didn't really do anything. We've been consolidating. Same thing goes for these moving average crossovers, where we've got the 20-day and the 50-day showing positive crossover here in late July, negative crossover in mid-June, and again just about a week ago. And yet we never broke down. And when you look down at the RSI, when you get into a period of sideways consolidation, instead of looking for moves on the RSI to 30, which is oversold, and 70 overbought, notice how we tend to just stay within 40 and 60 instead of those, that wider range from 30 to 70. I only point this out because anytime you see sideways consolidation, a lot of the momentum techniques that we like to use simply don't work. If you're looking for crossovers, just when you think you got something going in one direction, it just reverses. So I highlighted the areas that I think really make the most sense. For me, it's about price and resistance, or price support and price resistance. And on here, we're talking about yield support and yield resistance. But notice over the last 3 months, we've clearly established highs that we need to watch, starting with the gap down back in late May. And then just recently, we've had 2 pretty key support levels down about 2.81%. So as the 10-year Treasury yield moves up and down, I just wanted to point out that it really isn't doing a whole lot until we break out of this short-term range. I want to see either a confirmed break above 3.01% or a confirmed break below 2.81%. Otherwise, I'm just going to be looking for these moves back and forth. And as we see the 10-year Treasury yield move higher, that can bode very well for certain areas of the market like financials and perhaps even the industrials. Okay, as far as economic news out today, the wholesale inventories came out for July. They rose 0.7%. The market was expecting 0.2% rise, so a little bit better than expected, or at least higher than expected on wholesale inventories. The Case-Shiller Home Price Index for June rose 0.1%, market looking for 0.2%. Just another one of the home building or home construction reports, economic reports that really have not been favorable. Finally, consumer confidence came out for August, market looking for 126.8. How about 133.4? Huge beat on consumer confidence. That came out at 10 a.m. And since then, the market's been pulling back, of course. And that's just what the market does. It doesn't seem to always follow the economic news. Over longer periods of time, I think there's a pretty tight correlation, positive correlation. But in the near term, if you're simply looking for good news and then you're buying, a lot of times it's similar to earnings, where a stock goes up into earnings. And so you have a buy on the rumor, and then the stock comes out with great earnings, and then you see it go down for the next 2 weeks. Really doesn't seem to make any sense from a common sense perspective, but that's simply how the market works. Okay, let's take a look at a couple of things here going on in the market. And we got a ton of upgrades and downgrades, so I'm going to turn it over to Erin pretty quickly today. But first, let's take a look at, let's go into the Specialty Chemicals Index. I've talked about this recently. This is probably the best area within the materials sector. And the group is trying to make this breakout to an all-time high. But you can see 995 to 1,000 is overhead resistance, and that is where we're seeing sellers come back in. But if materials do well, this is a group that has been leading. I would expect to see continuing strength and eventually a breakout. I think a pullback probably to this rising 20-day moving average is all I would look for to the downside. Next up, semiconductors. Remember, talked these recently about this double bottom that went in, 33.50. Well, now I could annotate this again. I didn't put the resistance in, but let's go ahead and throw that in here. Because if you look where we have topped out over the past couple of months, we've got 35.60 or so as a key resistance area. That was the high today, and now it looks like semiconductors perhaps rolling over. This is noteworthy because I'll talk about semiconductors during the seasonality report, but semiconductors do not like the month of September, and that is just 1 week away. Finally, I did mention Qualcomm, so let me pull up Qualcomm here and take a really quick look here technically at the chart. You can see the movement to the upside. And I actually sold Qualcomm recently, right at about 67 and a quarter, reinvested in some other areas. The reason I did that was if you look at the weekly chart, I'm going to go back even further. Let's just go back 5 years on the weekly chart of Qualcomm. Look at all the tops. Here you had two tops, 67 and a half. Here was another one, 67 and a half. So the 67, 68 area is where we've been struggling. We're getting through that. Now we've got the 2014 high just above 70. I think we're heading there to test it. Eventually, I see a breakout coming. But this was just an area of resistance that I just didn't want to take a chance with Qualcomm. But I loved their recent earnings report. Great technical action here of late. You can see the PPO looks good. I think it's just a matter of time before we get that breakout. And of course, there is a very significant repurchase agreement in play for Qualcomm. They announced about a $30 billion repurchase agreement. The company has a market cap of less than $100 billion. That's a massive repurchase agreement that's in place for Qualcomm. So I think eventually we make this breakout. But I know there is a ton of upgrades and downgrades. So Erin, what do you think of the upgrades and downgrades in the charts?
All right. It's been pretty interesting, that's for sure. All right, let's get over to where we need to be. All right. Can you see my screen?
I sure can.
Okay, excellent. I didn't have the little green outline, so I wasn't sure. All right. Let's go ahead. As you can see, quite a few. I'm going to start with the downgrades. Applied Materials today. Let's go ahead and get this back here so I can see that. All right, Applied Materials today was downgraded from a buy to a neutral. And looking at this chart, I think we're really stuck in this area. I can see why it's downgraded. I don't think I would have this on my watch list. And one of the things I did want to point out when I looked at it was the weekly chart. Because this is certainly a reverse flag going on here. And I would expect some lower prices at this point. Getting that downgrade, even though we're holding that 42.50 area, I would expect to see it break down. And I think a move down to 40 at a minimum would be likely. But if you measure that reverse flag, that could bring us quite far to the downside. All right, American Software Inc. This one was downgraded from a buy to a neutral. Market certainly not liking that downgrade. We've got American Software down almost 4.3% today. I would look for a pullback to that 1650 area, and that could maybe move that PMO out of overbought territory. This was quite a move to the upside, almost parabolic. So I would expect to see a move down to that 1650, maybe even the $16 level. But at that point, it'd be interesting. I think when you would look at the PMO, I would want to keep an eye on that one. But for now, with the downgrade, I would expect lower prices to continue. All right. Control 4 Corp, CTRL, also downgraded today from an outperform to in line. So while that's not a horrible downgrade, I think the chart looks pretty horrible in any case. So you have a PMO that is certainly on the overbought side. It has turned down on this deep decline of almost 7.75% so far today. Broke down before below some important support. You can see where we had that symmetrical triangle and got the expected breakout on that, but now we're pulling back, and I would expect to see it really, it should, now that it's broken down below that area of support, I don't see support really lying anywhere until you get down to that 29.50 level. So this one could be a long ride down. All right, Harmony Gold, and I know we've been talking about miners and gold. Greg Schnell certainly has. With this one, we had a downgrade from Macquarie from a neutral to an underperform. So the gold miners, I know that gold has been poised to do quite well, but gold miners don't always go along with the metal itself. They are more subject to the winds of the market because they are a company rather than just a just a metal like gold is. So the pricing of gold can, of course, help and hurt your mining companies. But right now, though gold looks pretty good, I would say this Harmony Gold doesn't look that great. Now, I think getting that PMO buy signal and also seeing that downgrade, that's interesting, I would have to say. But, given the downgrade and it's in this trading range and has been since June, I would expect to see a test at the bottom of that range, maybe down to 160. This one being low price like it is, really watch your position size, because that one could be a pretty long and difficult ride, or a really great ride. Kind of reminds me of craps. Either you're going to get in and make your money pretty quick, or you're going to lose it all pretty fast. So right here, Lam Research, LRCX, has been downgraded from a buy to a neutral. You can see the PMO has turned back down. I think this one still is rather interesting in that it is getting close to this area of support. And the PMO has turned down below its signal line. It's below 0, so it's not optimum at this point. But this one could be worth a watch list, just to see if it gets down to that support area, see what the PMO is doing, and watch where we're getting the volume coming in or going out. At this point, not very interesting. And on the downgrade, I would probably just, like I said, keep an eye on it. All right, let's look at some upgrades. Antero Midstream Partners, AM, was upgraded today from a neutral to a buy. I'm not really sure why they did this, because I don't see anything really technically great on this chart. The EMAs are at least sitting in mostly positive, with the 20 above the 50, above the 200-day EMA. But the 20 is starting to fall. I don't see support until you get down here close to $29. Maybe worth a watch since it did get upgraded today, but I'm not really thrilled with the upgrade, so I'm not really sure what they were thinking there. Cody Incorporated also upgraded. Morgan Stanley upgraded it from equal weight to overweight. I like this chart. This one I like very much. So I might be putting this to trade. I might just be getting into this because I like the price of the stock. I like the double bottom on the stock. It just was upgraded. I've got a PMO buy signal. Look at this positive divergence from this price bottom to this price bottom. They were declining quite a bit, but the bottoms on the PMO were rising. So this one I think is poised to do quite well, and I would look for an upside. If this is a double bottom that has executed, which I think it is, it's past that confirmation line, so we measure the height of the pattern, add it to the breakout side. That puts us right over here at that overhead resistance between $14.50 and $15. So I think this one certainly has room to run. Even though it is up almost 7% today, maybe wait for a little bit of a pullback, but I think the upside potential here might make it worth getting in now. All right, Estee Lauder, another makeup company here. Equal weight to overweight by Morgan Stanley. I like the chart. I've got the PMO buy signal. You can see that OBV is turned up. Scooter is trying to rise. It's not in the hot zone yet, but it does seem to be interested in getting up there. We have a 1.25% rise just about so far today. It's hit this area of overhead resistance, at the previous top, and it did break out, but it has fallen back down, but it's fallen toward the 50-day EMA. I think the 50-day EMA could act as support right now. So I would be watching this one. Again, you've got that PMO buy signal and oversold territory. I think that is certainly encouraging on Estee Lauder, but I like Cody better. RH was upgraded today from a hold to an accumulate. Not much here on this chart, in my opinion. PMO is rising, but very slowly. OBV is doing its thing, and you do have the scooter up in the hot zone, but we've hit this overhead resistance here at that previous June top, and it's already been on kind of a run. I'm not as thrilled with this one as those others that we just looked at. XLNX is the last one. It went from a neutral to an outperform on the upgrade. You could make a case for a double bottom, but double bottoms are reversal patterns, and we came up into that. We did beat already. We managed to break out above that March top. I think it looks pretty good. You do have the buy signal on the PMO, but this is when I probably, it is getting that pullback toward that $76 range, which could be considered new support. So this one has some opportunity here, but like I said, I think I like Cody much better. And that is it for our upgrades and downgrades. Tom, are you ready to get it going with the seasonality report? I'm very curious to see what you have in mind, since you were saying that September isn't always the greatest month, but I suspect you have some stocks you're expecting to do well anyway.
Yeah, I am ready to go. September is not a very good month. And so first, I'm just going to look at the S&P 500 and just remind everybody we are at an all-time high. And I do like to look at the technicals in addition to historical. I don't just look at the historical trend, see overall bearishness and get bearish the market, especially when we're breaking to an all-time high. But I do look to kind of use history on the technical chart, maybe to start thinking about where we might go. So we've got a breakout on the S&P, which is good news. We should have some initial support on the S&P down around 2873 because that was the all-time high prior. But if we fail and we do drop back to about that 2800 level, that wouldn't be a horrible thing, because on a weekly chart, that rising 20-day moving average, when you've got a nice trend in play, that rising, I think I said 20-day, 20-week EMA does tend to be really good support from a short to intermediate term basis. And you can see over the past few months, when we have pulled back around that area, that's where we have seen strength. So a pullback to test this rising green line, the 20-week EMA, would not be horrible. And that is a little bit more than 100 points below where we are right now. So just remember, 3.5% decline on the S&P 500 would not necessarily be a bad thing. And that would line up with history. So I'm bullish the market, but I'm also aware of what's going on historically. In September, the S&P 500, I'm just going to go through some stats. I'll start looking at some charts in just a minute, so bear with me. But if you're looking at the S&P 500 since 1950, September has been higher 30 times. It's been lower 37 times. And it has an annualized return of minus 5.58%, which is about 14 to 15% below the average annual return on the S&P over the last 68 years of 9%. So the S&P throughout the year averages going up 9%, but September annualized return minus 5.58%. So you can see quite a bit of underperformance that we tend to see in the month of September. September ranks 12th out of all 12 calendar months. It is the worst month for the S&P 500 in terms of annualized return. The NASDAQ, since 1971, it's risen 26 times in September. It's fallen 21 times. Annualized return minus 6.34%. Also ranks 12th out of 12 months. Russell 2000 since 1987. So this is roughly the last 3 decades. It's actually risen 19 times in September and has fallen only 11. So just looking at that, you think, oh, maybe September's pretty good. But the annualized return is still negative, minus 1.65%, which ranks 10th out of 12 months. It actually is a little bit better than both August and July, but still not particularly good. So it's risen 19 times, fallen 11 times on the Russell 2000, but still has a negative return. So what that tells me is that when it goes up, but not as much as when it goes down. In other words, when it's weak and technically weak, we can see some pretty big drops in the Russell 2000 along with the other indices. So we got to keep our guard up in September. Now, again, I'm seeing nothing but bullish action technically. So any kind of pullback, I don't look for massive drops, but I wouldn't be shocked to see a pullback maybe to test rising 20-week EMAs. And that's something to be thinking about and possibly use as entry points if you have cash available as we go through September. All right, notable periods within the month of September. On the NASDAQ, first 2 days, September 1st and 2nd, annualized return 68.74%. The S&P 500, August 31st to September 3rd, annualized return 31.05%. And the Russell 2000, August 29th, which happens to be tomorrow, through September 4th, annualized return 38.62%. So most of the major indices do tend to start September in pretty good fashion. Other notable periods really toward the end of the month. one middle of the month period, the Russell 2000, September 11th to the 16th, annualized return 50.66%. So the Russell 2000 does tend to show some strength in the middle of the month. But then as we get toward the back third of the month, we got to be careful. The NASDAQ, September 20th to September 27th, annualized return minus 48.09%. The S&P 500, September 20th to the 26th. So the NASDAQ 20th to the 27th, S&P 20th to the 26th, annualized return minus 39.41%. That again goes back 68 years, so it's not anything to ignore. And then the Russell 2000, September 20th to September 25th, annualized return minus 79.76%. So we do have some historical bearishness, especially once we get past about the 19th of the month. And if you recall, I've gone over the history of all calendar months. We know that the 19th to the 25th is the worst time of all calendar months. It just so happens in September that maybe the dates are a little bit different, but still essentially covering that same period from about the 20th to either the 25th or the 27th, depending on which index we look at. Okay, so let's take a look now at the XLU. Over the last 20 years, this actually is one of the best performing groups in the month of September, utilities. And if you think about it, the market tends to be weak in September. So it makes sense that money would rotate towards defensive areas like utilities. Now you look at that September return, you say, wow, 0.2%. Thanks, Tom. You know, I can make a fortune on that. Well, it's not just the absolute return, because clearly the absolute return isn't that significant. But keep in mind, the S&P averages going down during the month of September. I think it's 1.2%, something like that. So the XLU on a relative basis to the S&P 500 averages outperforming by 1.4% during September. And if you look at all the other months, nothing else is even close. So this is the month that utilities tend to outperform. Again, not that it goes, shooting higher on an absolute basis, but this is not a bad area to park your money. If you're a little nervous about the market into September and you want to be a little bit more cautious, I think the XLU makes sense. And if you take a look at the chart on the XLU, it's not bad technically. I mean, we just broke out. We had some resistance, 53 to 53.5. We broke out above it. So now perhaps we get this support, and maybe we do trend a little higher in utilities in September if the market pulls back. So technically it kind of lines up with the history as well. And that I try to look at both. I don't want to just trade based on history, but if it makes if the story kind of fits with what's going on technically with the charts, then I do like to use the history and historical tendencies to give me a little bit more confidence. Okay, so next up, the XLP. Let's take a look at the XLP relative to the S&P 500, because this is another group there. It's a defensive group, and you can see September, 0.9%. That's the average return in excess of what you would get from the S&P 500. But again, this doesn't mean that you should expect big returns, because if we just look at the absolute returns on the XLP, you will see that it actually has lost money, minus 0.2% on average over the last 20 years. But remember, the S&P has averaged losing more than 1%. So on a relative basis, consumer staples tends to do well, but not so much on an absolute basis. So those are the leading groups. What are the groups where, which ones should we be most concerned about? Materials. Material stocks tend to underperform. Look at that underperformance. Minus 2.5% is their average return during the month of September. And if you look across all the other months, the only other month that's even close is January. XLB only goes up 42% of the time. So September historically goes down 58% of the time. That is a concern. And I don't want to keep taking up too much time comparing it to the S&P. I think you're probably going to start to get the drift here. But here, if we drag this back, you can see that materials underperforms the S&P 500 by 1.3% during the month of September. January at minus 1.2% is the only month that's really close. And then finally, might not like this one, technology. Technology does not like the month of September. It tends to underperform the S&P, which already goes down at 1.2%. But in September, the technology ETF underperforms the S&P by another 0.7%. So again, if we get rid of this S&P 500 and just simply pull up the XLK, you will see that historically, September minus 1.9%. It does go up 53% of September's. Now, we're generally in a bull market, and anytime you're in a bull market, I think you have a better chance to go up in September than if you were in a bear market. So most of the years over the last 20 years have been spent in bull market years. So I'm not shocked by 53% up for XLK, but having an average of almost 2% lower in September tells me that when we go up in September, when technology goes higher in September, it tends to be somewhat muted. And when we go down, it tends to be much more painful. Technology tends to drop quite a bit. Now, if I look at the chart, I'm not going to pull up the XLK, but I like the chart on the XLK going back weekly. We just broke to an all-time high. So if we do pull back in September, to me, it's just more of a healthy pullback and consolidation. It's not, I'm not looking for a sweeping drop in September that is, kind of reminiscent of a bear market. I'm not looking for anything like that. So those are the sectors. How about industry groups? Well, this isn't exactly an industry group, but I feel like I need to mention it. The TLT, the 20-year Treasury, you can see in September tends to rise, goes up 1.2%. So if you're looking again to park money that you want to be, you're a little bit more cautious about the market right now. The stock market tends to do poorly in August and September. And look at August and September. It's two of the best months. It actually is the two best months for the TLT. So this is an alternative. If you're looking for safety, you're just a little bit concerned about the market being too high. You think we could get a pullback. XLU, I think, would be one answer. TLT would be another. XLP, consumer staples, is a third. These are areas that tend to outperform the S&P 500 during these summer months where we see U.S. equity weakness. Also, let's pull up gold. If we pull up gold and we go back the last 20 years, September, we average going up 2% in the month of September. So we've been seeing some strength in gold. Perhaps that continues. I would watch, keep a close eye on the dollar. If the dollar starts to move higher, I'd be a little careful. Again, I'm going to look at technicals before I look at these historical tendencies. But clearly, gold likes August and September, and we're already starting to show some strength here as we close out August. Gold is certainly worth a thought. DJUSNS, this is the internet group. Normally, you wouldn't think internet in September. Technology we just talked about is usually really weak. Well, internet over the last 18 years has actually gone up quite a bit in September. It's gone up 75% of all Septembers over this period, and average is going up 3.9%, and it's followed up with massive October gains. So if we get weakness in September, it might be time to maybe think about some of your favorite internet stocks for perhaps a big run into its best seasonal period of the year. Internet stocks I know have been broken recently, especially because of Facebook and maybe Twitter, but there are others in the space, Google, for instance, that has continued to perform pretty well technically and could be poised for a nice rally coming up the next couple of months. The last one I want to mention in terms of strength, industry strength in September, footwear. Take a look. September goes up 61% of the time. Average is going up 3.3%, which is second only to March throughout the entire calendar year. So September produces more gains than the bullish months of October, November, and December. Footwear, interesting area to consider. Okay, so what areas should you be a little concerned with going into September? Well, as you can imagine, there's a pretty long list because the market overall does poorly. But on a relative basis, the ones that do the worst, let's start with steel. Steel does not like the month of September. You can see it has gone up 56% of the time, so it's a coin flip there. But when it goes down, it tends to go down pretty hard. Average return on steel over the last 19 years during the month of September, minus 4.9%. August, and June, both down months, but really September is really weak. And you can see August actually up only 21% of August going back the last couple of decades. But steel doesn't like September. You got to be careful there. Let's take a look at aluminum. I mentioned aluminum earlier in the show. So let's check this out. Aluminum down 4.8% on average in the month of September. So when we looked at that chart, and let me pull that up while I was thinking about it, but we pulled up that chart in the opening minutes, and you saw that false breakout. This has been an area of support, 140 to 145 throughout much of 2018, but big volume breakdown back in July, and now on the recovery attempts. I don't like that candle at all right now on aluminum. And knowing that it hates the month of September, I would be really hard pressed. I'd be out of anything aluminum going into the month of September, just based on, again, combining history with what I'm seeing technically. I don't like that on a technical basis, and history just makes me dislike it even more. Okay, the next industry group to take a look at. How about tires? All right, last 19 years, minus 4.7 on average in the month of September. Outdueling June, which is down an average of 3.7%. You can see when you want to be in tires. November and December, that's when the rubber hits the road for this industry group. November and December, up better than 10% on average during these 2 months over the last 19 years. Outside of that, I guess maybe March and April pretty strong as well. But certainly September and even October, look, next 2 months, really poor technically for both months as far as tires go. And then finally, I mentioned semiconductors and the fact that they do not like the month of September. Well, here is the results last 19 years, minus 4.4%. You look across the board, it's easily the worst month of the year. It has gone up 50% of the time, so it's a little bit of a crapshoot. Not saying it can't go up, but when it goes down, many times it does tend to go down quite a bit. So at least be aware that the historical tendency is a little bit more bearish in the month of September for semiconductors. And that's where technology gets a lot of its bearishness from. We saw internet's not too bad. Actually, internet's pretty strong in September, but semiconductors very, very weak in the month of September. So those are the industry groups. So how about stocks? How about individual stocks? And I'm going to focus on some that kind of relate to what we've already talked about in terms of sectors and industry groups. So let's start with some stocks that tend to outperform. And these are all stocks that are in the S&P 500. First, let's take a look at Nike. Nike is, of course, in that footwear space that I said was so bullish during the month of September. Well, Nike, 74% of the time it rises in September, better than any other month. Average return for Nike, 6%, just during 1 month of the year over the last 2 decades. It's a nice return. And oh, by the way, the chart looks pretty darn good too. You pull up Nike, just had a gap up with its earnings report. Actually, the last two, this was earnings report. This may have been an upgrade, I'm not sure. But anyway, the earnings report here, we gapped up back in late June, pulled back, hit price support, and we've continued to rally. I think Nike looks really good here, and historically makes sense. Now, could it pull back a little bit more? Yes. And if it gets back down to that 20-day moving average around 81, based on what I know seasonally, then yeah, Nike for me would be a definite trading candidate. What else? How about Google? Mentioned Google earlier in that internet space. Internets like the month of September, and check out Google. Look at what Google does in September and October back to back. Goes up 80% of the time in both months and is up over 17% on average between September and October going back to the last 15 years. 17% is a pretty nice return for an entire year. Google's average doing that over the last 15 years in the months of September and October. Got to consider Google. And this is another one where I mentioned Facebook not really looking so good after its earnings debacle. But you can see after gapping up with its earnings in July, went back down, tested gap support, and this is where I don't own Google, but I probably should have at that point, tested gap support and bounced off of it, starting to rise pretty nicely. RSI had dipped into the 40s. This is really a trading strategy of mine. I think Google looks pretty good, but it is in a trading range for now. I'm going to say down to about 1210, 1205 maybe to the downside, upside around 1290. How about lagging stocks on the S&P 500, some laggards? Well, I do want to mention Apple. And the reason I want to mention Apple is that when we drag this back 20 years for Apple, when you take a look, Apple goes up almost all the time. Apple's been such a great performer over the last 2 decades. So you have essentially average returns that are positive in just about every month, and most months pretty darn significantly positive, 4, 5, 7% on average within months, because Apple's been such a great performer. But check out September. It's one of only 2 months that has negative returns, September and December, which is kind of surprising considering that December has been such a good month for the market for so many years. But September averaging going down 2.5% on Apple over the last 2 decades, and Apple only rises 42% of the time in September. So, and I actually wrote a little bit about this in my blog this morning about computer hardware stocks and Apple, and the fact that this is just a company you want to be a little concerned with, maybe technically. And one of the reasons that, and I'll go back and just show you here on the computer hardware index. This isn't really seasonal related, but I think it is an important point. I'm going to go back 5 years. Probably don't have to go back quite that far. But look at the PPO when we get up into the 2 to 3 range on the DJUSCR. That seems to be where we top. And we've had a huge move up in computer hardware, and that's what we tend to get. But once we reach this level between 2 and 3, it's not unusual to see the group tend to struggle and go sideways, perhaps even pull back for a bit. So I'm thinking that Apple, because we are moving into that month of September and we are at an area where we do tend to see weakness, might make sense to pull back the strings a little bit on Apple. And one strategy, by the way, instead of just selling and getting out of stocks, if you're familiar with option strategies, I think a situation like this where you really want to own the stock, but you think temporarily we could get a pullback, consider selling covered calls against your position. If you're not familiar with the strategy, look it up, make sure you're educated about that strategy. But it is a way to own the stock and kind of limit your downside risk. And if the stock just simply goes sideways, you actually pocket a little bit of money by selling the calls. But if you're not familiar with it, I wouldn't encourage you to take on that strategy. It's just something I think that's worth mentioning because the market is bullish, and I think just temporarily we could have some issues. So what else? How about AMD? Talk about a stock that has been on an absolute roll. Well, it doesn't like September. You can see the last 5 years right there, but let's just drag it back 20 years. Only goes up 32% of the time, and it averages going down 5.8% during the month of September. And if we take a look, I don't like AMD's candle from yesterday. I think that is a selling candle. That is a shooting star off of a massive uptrend. And check out the volume. I think that is a crescendo of buying that we saw yesterday. I think that the top is in on AMD in the near term. And if I owned it, I'd sell it and buy Intel. Although actually Intel's on my list here, not great September performers. But if I wanted to be in that space, I think Intel's a better play now off of that candle. I still love AMD going forward. I'm not trying to say that this is a bad company. I think it's being heavily accumulated, but I think we're going to get a 20-day test. I could see some short-term weakness here, and a better opportunity to get in would be down closer to $21, $22. All right, let's keep going. A couple of others that I think are worth noting from a historical perspective. How about another semiconductor stock, Microchip? Last 20 years, it's gone up 32% of the time. Average is going down 4.6%. You look across the board, there's no other month that's negative. And yet September is minus 4.6%. Now, I don't know if you noticed this, but over the last 5 years, it's been just kind of flat. It's gone up 75% of the time. But I still would rather have a long-term track record. And the long-term track record tells me to be careful with Microchip. I mentioned Intel earlier. How about Intel real quick? Intel, September, that's what I was talking about. Average is going down 5%. So it's kind of in that same camp with AMD, but technically it's closer to support. I just think AMD technically has more room to fall. It's better. It's a better stock technically. AMD is better from an intermediate term perspective, I believe, because of the accumulation that's taking place and the breakout and the relative performance. But I think it's too much risk in the stock. I'd wait and see and hopefully get some of that risk taken out by a trip on AMD back to its 20-day moving average. And then finally, one last stock, Xilinx. This was one Erin mentioned earlier, was upgraded. I would personally be really careful with it, and I'll show you a couple reasons why. Number one, you can see that September is its worst month of the year, only goes up 42% of the time, but its average, average return in September of the last 20 years is almost 4% loss. And when I take a look at the longer term chart, I did like the breakout today here, and you can kind of see breaking out above these highs. But what I ended up doing was taking a look at the longer term chart. You can see the weekly. I think this is a great pattern, by the way, but 75 to about 77.5 has been key overhead resistance. And so we're at the top of the resistance. I think the chart here, by the way, if we get a breakout, I love this chart, because as we moved higher here with higher prices, see that negative divergence, lower PPO? Well, we've gone back, we've consolidated, the PPO has returned to the center line, and now we're just beginning to strengthen. So if we get the breakout, I'm a fan of XL&X Xilinx. I think this one goes higher and could be one of the best performers within the semis as we head into the end of the year. But I need to see that breakout first. Otherwise, I'm going to sell at an area of price resistance, look for a pullback. If semis struggle in September and we get a $3, $4, $5 pullback on Xilinx, I think it would set up beautifully into year end. Okay, last thing I want to do is I want to just show you a little trick. And so if I go into the member dashboard and I go down to select your scan, down under your scans, I'm going to pull up a new scan. I just want to show you how easy it is to, I showed you earlier that semiconductors, for instance, do not do well in the month of September, correct? All right, now I'm going to show you on the indices. I'm going to pull up the S&P 500, and now in this scan, I'm pulling up any stocks that have average volume greater than 40,000, and the group is the S&P 500. I could get rid of this criteria, but I know all the stocks in the S&P meet that criteria. Check syntax, shouldn't be a problem. Syntax is correct. Now I'm going to run the scan. This is one way just to quickly drop 500 S&P 500 companies into a list like this. Now I'm going to dump it into a folder. I'm going to replace an existing chart list, and I would suggest you do this every couple of months, because the S&P 500, we do see some stocks dropping off, other stocks coming in. So if you just keep the same list from quarter to quarter, there are going to be some changes, and you're not going to have them in your list. So at least once a quarter, run this scan and then dump it into your list. I have a list that I call my S&P 500 components. So I click OK. Now I've got an updated S&P 500 list. It's going to come up in summary form. And this is a pretty cool trick, and we've talked about this before on Market Watchers Live, but I'm going to type in semiconductors into this box, and it gives me all the semiconductor stocks in the S&P 500. And this little snowflake, actually, I think that's a snowflake, is just the little emoji or whatever you want to call it for seasonality. So if you want to look at any of these stocks, and we could sort it by scooter. So you say, oh, AMD is best performing semiconductor in the S&P 500. Wonder what its seasonality looks like as we go into the next few months. Well, here you go. And this is where you can pull it back. You can see September's awful. October is not very good. And it's not until November where we start to strengthen. So we're overbought. We've had that huge reversing candle yesterday, massive volume. We could simply go into a period for the next several weeks of consolidation on AMD. I'd take the money and run personally. And I love AMD, and I wish I owned it, but I don't. I haven't owned it. But if I did, I would, off of yesterday's candle, I'd be a seller. And so I just wanted to show you how important just dropping something like that, the S&P. I like to keep the S&P 500 in a in a separate folder, because, for instance, and I'll talk about this in a little bit, but one of the areas of the market that I'm looking for, waiting for a breakout, and I did mention this at the very opening, is life insurance. So I can type in life insurance, and there I have the 9 stocks in the S&P 500 that are in life insurance. I've got it ranked by Scooter. So I've got the best of the worst based on Scooter rank. And I could, go in and look at seasonality, and I'm going to bring this one up because I know AIZ has a pretty good track record in September. AIZ goes up 79% of the time in September, up an average of 2.6%. And as a result, you can see that could be a really nice stock to consider. One final chart, AIZ. You can see it's been rising, negative divergence in play. I look for a 50-day test. We got that. We got this false breakdown, rally with the hammer. I think this 104 area is a great entry point for AIZ, and history backs me up. Okay, I am going, and by the way, I want to see if I can get that breakout on life insurance. Then I really like this trade. And AIZ, I believe, also is on my strong earnings checklist or watch list, chart list, whatever. And I'd have to go back and double check that, but I believe AIZ did beat on its most recent quarter. That was probably back here with all this volume in June. Okay, so let's wrap up. I went a couple minutes over, but let's go ahead and pull up a quick summary of the things I talked about. This is just a very general summary, by the way. But I'd like to go over the index ranking, the leading, lagging sectors, leading and lagging industries, and of course gave you the stocks to watch. And that is it. That is the wrap up for September seasonality. Hope you enjoyed it. Let me know, by the way, when you fill out the survey at the end if you find this information helpful. I'd love to get some feedback on that.
Okay. Excellent. Catch your breath, and we'll go ahead and start challenging you yet again in another minute or two. That was excellent, and I'm sure your survey responses are going to be quite positive for that. All right, let's go ahead and see what we have going for the 10 and 10 so far. All right, here is our RRG. Let's go ahead and just get that bigger for us. I've already gone through and looked at a lot of these. So I checked out the sectors. I already looked to see which ones were traveling in the right direction. We have some really interesting outliers here, and I think I have one of them on the list right now. And currently, as far as the most popular in the chat room, it's kind of a tie between Micron and Teladoc, TDOC. So go ahead and get in there and like whichever one you're interested in. That will be the second symbol for the 10 and 10. But let's go ahead and get started. Are you ready, Tom, for our first one? McDonald's. And I am hungry, I have to tell you. I am ready for lunch.
I am hungry, but from a stock perspective, I'm not hungry for McDonald's, not yet.
Right.
And a couple reasons why. I mean, mostly we've been buried in this sideways consolidation. I'm trying to outperform the S&P. The S&P is breaking out to an all-time high. It's really difficult to outperform trading McDonald's when you're simply going sideways while the market's going higher. So yes, you could catch price support and get some bounces. That would be something to consider. And if we pull back down to that, mid 150s range, I think that would be something certainly to keep in mind. But right now we're in the middle of this range. Are we going to go higher to the top end? Are we going to go lower? I don't know. Restaurants, you can see, have not broken out above the June high, and they certainly are nowhere near the January high. And so what we have is McDonald's versus its peers, the restaurant peers. It's been underperforming, which is not good. You got McDonald's underperforming the S&P 500, not good. You got restaurants and bars underperforming the S&P 500, not good. Really hard to outperform the market when you own a stock that is not doing any of those things. So I don't like McDonald's right now. I'm not saying it couldn't go higher. It's starting to act a little bit more bullishly. It went down just below the 20 and came right back up. A breakout above 162, I think, could send us back to 166, 166 and a half to challenge overhead resistance. I think the market's going higher, so eventually I do look for McDonald's to go higher, but I don't know that we're going to see outperformance, at least not yet.
All right. And the winner is Micron, MU, which is just as well because we have looked at this one very recently, so it wouldn't have come up otherwise.
All right. I am a little concerned about Micron just in the near term. I think long term it's fine. I think I talked about that a little bit, but it's had a pretty good move here to the upside. And we're getting close I'm trying to just look at some key areas of support. We had a low over here, maybe a couple of lows in here. I'm just going to say 51.5, 53 is an area where you can see the past 3 months we've had some pretty nice support on Micron. And now here we are moving back up into this zone, getting close to the 50-day. And I could probably also draw a trend line. And it's a semiconductor stock, by the way, which we know has been kind of a weak link. I could draw there. The thing is with trend lines, you can really just make something fit however you want it to fit. So for instance, I could say, okay, we got a lot more room to the upside, because if you connect those two highs, maybe we're making a move up to 55. But, I try to look for the channel, and I'm not really seeing a channel either here. But so if I just use this, connect these highs right here. When I talk about channel, what I'm really referring to is grabbing this line and having the exact same, well, actually it does fit pretty darn good. I think, looks to me like we're in a channel, trying to break out, but, not getting through the 50. This is overhead resistance. And if we fall back down below, say, 51, it looks to me like maybe we could be rolling over again with Micron. I think there's a lot of mixed signals here, I guess, is the bottom line. And I think there are a lot of other stocks out there, if I'm trying to outperform the S&P, that I want to own right now. That could change with a big, heavy volume breakout on Micron. But for now, I think I'd avoid it.
All right. Let's see. Since we haven't looked at it in the last week, and everybody seems to want to look at it, let's go ahead and do Teladoc Health, TDOC. I'm getting a PMO sell signal on the way, so I wouldn't be looking at it at this point.
Well, we can test our systems, because I'd be a buyer.
Yeah, I had a feeling.
Uptrend, you can see with this last move up, very heavy volume. The PPO, it was rising at the most recent high. It started to pull back, but when I've got a rising PPO and I get a pullback to test support and that rising 20-day moving average, I'm a buyer. So there's kind of the breakout. Here was the prior high just, about a month earlier. But this 70 to 72 area, I think, is good support. The 20-day is right in the middle at 71.52. Today's low, 71.80. And we've had a recent high up near 77, 77.5. So I think the reward to risk. Now, I would agree with you. If I break down and lose support and the PPO continues dropping, I'd have a tight stop. So I think intraday even, a move below 70 would bother me. But I think we're going to go back to 77. I like it.
All right. Yeah, I see a negative divergence too. I'm sure with the PPO, it's the same. So
well, I'll comment on that too before we go, because the way I read divergences is here was the negative divergence, higher price, lower PPO. So instead of holding a rising 20 period, I look for the 50 period test, which essentially gets rid of that negative divergence. As we get closer to the center line, there's no more momentum in the stock. And again, this is just the way I look at it. I'm not saying that it's the right way. It's just my way. As you get closer to the center line, your short-term moving average and your long-term moving average are identical. That's what the zero line represents. So once we get back down to there, I don't care where the PPO was previously. What I'm looking at this point is just this move up. I see momentum accelerating, volume coming in, and I think pullbacks are generally a good time to enter.
All right. This one looks like a good agree, disagree. We'll have to take a peek at this one next week. See what's going on with it. All right. The next one we have is HEI. And I'm trying to look at this one myself here.
Love it. Now, I wouldn't chase it just yet, but this will be going. I think they beat top and bottom line. And actually, this is a little thunder somebody stole from me, because this is on my watch list that I was going to talk about in a bit. But HEI, look at the volume coming in. Huge move to the upside. I want to see how this candle forms today. If we go back down near the low of the day later today, then I think we have a chance to fill this gap back to 81, and I'd be patient. If we finish strong today and near the high, then I think the open today, along with the intraday low. Now, I don't know if this is going to end up being the intraday low, but this is the accumulation zone for me if HEI finishes strong today. I love these companies that beat earnings, especially ones that have sideways consolidated for a while. Now, I haven't looked at the report, but I know they were reporting earnings, and I'm assuming with this kind of reaction that they probably beat and maybe even raised guidance, but I'd have to confirm that. But yeah, I like this one. I think it looks good.
All right. One that we haven't looked at in a while. I think it's looking pretty good, but I would want to pull back is Square, SQ.
Okay, Square is a great. I'm going to bring this one up in my relative chart format. Yeah, I'd like to see a pullback as well, but talk about a stock that has shown tremendous relative strength and just continues to go. And I've had this discussion with Grayson. I think Grayson from Stock Charts owns this one, and it kind of fits what he likes to look for, which is a stock, and really everyone should be looking at this. But you got a stock that's been trending higher. I don't think anybody can argue that point. It's in financial administration. It's in that industry group, which has been trending higher. Square has been one of the best performing stocks within financial administration. Square clearly outperforming the S&P 500, and financial administration outperforming the S&P 500. This is a win-win-win-win-win. 5 wins on Square. I like the stock. Yes, it's a little overbought, but I see no signs of weakness here just yet. Pull back to the 20-day moving average. I'd be a buyer.
Mm-hmm. I agree with you there. All right, how about Office Depot? My PMO is a bit on the overbought side, but I could see a flag as a possibility.
I like it, but I like it better on a pullback to the 20-day. I just think there we would have maybe a little bit, and you can kind of see these relative charts. ODP relative to the S&P bottomed a few months ago, starting to turn back up. So I give it a little bit, we're seeing a little bit of life, but knowing that the longer term relative strength lines are down, I would have a very tight leash if this broke down. But I think the area right about there, 310, if we get a pullback, you'll hit the 20-day moving average, and also some pretty important, we've got multiple tops coming in at about 310, and then we broke out above it. Couple warning signs. Number one, the relative weakness that I pointed out down here. Number two, the last breakout, not really a whole lot of volume supporting it. So if we pull back to 310, I have a tight leash at that level, but I'd be a buyer there.
All right. This one looks quite interesting. It is low volume, but the Poland ETF, EPOL, I'm seeing a reverse head and shoulders off of a longer term downtrend.
Yeah, I can kind of see that same thing. It looks like a breakout of it. All right, I don't need this in relative form. Let's go with this. And yeah, I think even this chart will show it a little bit better. But yeah, I would say right here is your neckline. I like the upsloping neckline, by the way, better than a flat or a down. I don't like downsloping necklines at all when I'm trying to call a bottom. But here, because in this case, we actually broke above this. So a downtrend consists of lower lows and lower highs. When you get this breakout above here, I think that's starting to show you signs of a potential bottom. And then also, I think if you take this low, compare it to this low, we also have slightly upsloping shoulders, which I think is good. We've gotten the breakout. Here was the lower low. That's the head in between the shoulders. Yeah, I agree. I think that this does have some pretty good signs, at least in the near term. I would use that rising 20-day moving average as my stop.
Okay. This one's a little too volatile for my taste, but Spotify, SPOT, of course.
Okay, SPOT. I've got to get 3 more in here. Try and pick this up a little.
Mm-hmm.
Yeah, I think it's nice ascending triangle off an uptrend. Doesn't have a whole lot of history. Just came out in April.
Mm-hmm.
It's public offering, so that would be a little bit concerning to me. But let me get there is your overhead resistance, which I think is pretty easily identifiable and established. Actually, I like to draw it after the top is in, so the line should be drawn about through here. Now, here's the question: Do we get the breakout now, or could we pull back one more time to 185, possibly even down to 175? I would be aware of this pattern, because if we get a confirmed heavy volume breakout above 196, I think we measure up another $20 to about 215. I think this is a bullish pattern off of an uptrend. I like Spotify. I'm not a big fan of the fact that it is at resistance or close to resistance at this point, and the fact it's only been trading 4 or 5 months. So those are the downside issues. But overall, I think that this is one that looks pretty good. We just need that breakout to confirm.
All right. This one's interesting. Symantec, SYMC. I'm actually seeing a positive divergence here between PMO bottoms and price bottoms from June
Yeah, I just don't like the volume trends here. I'm going to go back a year. You have to keep in mind, actually, what I'll do is I'll pull it up on my relative chart because this is going to show really awful relative performance. Software has been rising for a long time, and here's what Symantec has been doing. If there's one positive, maybe it's this hollow candle. Maybe that's an exhaustive gap to the downside. But here's Symantec relative to software. Here it is relative to the S&P 500. And again, software has been strong. So if you've got one of the best, if you're in the best industry group, and I think software is the best industry group, and this is your performance, I can't get behind it. I mean, there's reasons why this stock is selling off, and I'm not going to try to be the hero to find a bottom in it. So I just simply look at this and this, and that tells me to stay the heck away from it. Yeah, I mean, we may get some solid earnings reports gap up at some point and start to reverse this trend, and you'll begin to see the relative strength pick up. I will wait until that happens rather than try and call the bottom. That's all.
Yeah, absolutely. Agree with you. All right. Canopy Growth has been on a parabolic move to the upside. Looks like it's pulling back. CGC. I would like to see the pullback go even further.
Yeah, it's way overbought. I agree. There's just too much risk to the downside right now. I mean, this is a really strong stock. Obviously, look at the volume, a lot of momentum in this stock on this gap up and move. But you never know quite when that reversal is going to come in. You can see we had massive resistance up at about $36. We went up, we came back, we held $36. That's proven to be a great support level so far. And you've also got the rising 20-day. When you got a breakout and this kind of momentum to the upside, the 20-day, I believe, will hold and provide really solid support, which is about that 35, 36 area as well. So the problem with getting in here is that you've got $6 of downside before you hit what I believe is a key support area. I don't have any other support area in this range. I mean, maybe you could use some of these gaps, but I don't know which one to use. And so I just can't set my stop close by getting in at 42. It's not that I don't think the stock could, I mean, we could see it at 60 in another week, but I just don't know how to manage my risk to the downside. So that's why I'd have to wait.
Mm-hmm. Good call. All right. That is 10 stocks in, well, somewhere around 10 minutes. We did get started a little late. You'll find all of these charts with those annotations in the Market Watchers live chart list. Just go to the Market Watchers live blog, and the link will be right there at the top. It's also in every single Market Watchers recap that I put together at the end of the day. All right, time for our final market update. Let's get going. All right. Okay, so as you can see, let me get this and make sure it's completely up to date. It doesn't look right. All right, there we go. Yes, that's more like it. All right, well, we can see that the markets are really digesting the rally that we had earlier in the week here on Monday and moving mostly sideways at this point, though the Dow is up a little over 26 points, S&P 500 up just a little over 1 point. NASDAQ also higher. We can see that the OEX S&P 100 is also following suit. With the Dow and others moving mostly sideways. Interestingly today, though, we're seeing the S&P 400, the mid caps and the small caps in negative territory, certainly on a declining trend for the day. Looks like trying to make up about half of the losses so far, though, as both of them do begin to rise back up. TSX, bad day all the way around. Although opening just a little bit higher, has been on a downward slide slump. Looks like we may be finding some support here at the intraday low, but we thought we did that earlier too, and it didn't happen. TNX, we've got 10-year treasury yields are higher right now, 2.879%. UUP gap down, moving mostly sideways. Gold was higher in the morning, probably on that decline in the dollar, but is now also in negative territory and is down 20 cents GLD at 114.39. You can see the last 3 days we're getting some consolidation of that earlier rally, which of course is not on this 3-day chart, but not a surprise to see a little bit of flattening there of gold prices. USO is just off its intraday low from Friday, you can see, and it is starting to head back up, but down well over 0.75%. USO at 1438. The VIX is, was mostly sideways here into the morning, but we're now seeing a bit of a rise. Currently, it's reading at 12.36, still a rather low reading. And that concludes the final market update. Tom, did you have something you wanted to share before we get into our final segment?
Yeah, one chart that actually showed in my blog this morning I think is worth mentioning here, because the direction of the 10-year Treasury yield can have a big impact on the outperformance, which areas of the market outperform. And so this is a kind of a shaded, well, not kind of, this is a shaded chart showing what happens when the 10-year Treasury yield, that's the top part of this screen. This is over the last 5 years. When you get it into an extended period of rising Treasury yields, like we saw back in second half of 2016 into early 2017, and then the tail end of 2017, the first quarter of 2018, what we normally see is a financial group. This is the relative strength of financials versus the S&P 500. And you can see they really pick up when the 10-year Treasury yield's rising. Many of the key areas, especially banks and life insurance companies, when the yield's rising, their profits grow, sometimes exponentially. And so as the yield starts rising, you see a lot of money rotating into those groups. Industrials, maybe to a lesser extent, we've seen during the rally over the past couple of years, financials and industrials tending to move together. But that relative outperformance by these two groups tends to wane. And actually, we see underperformance when we've got the 10-year Treasury yield peaking and moving lower. So you can kind of see, especially with the financials, but also to some extent with the industrials, not really outperforming and for the most part underperforming when the Treasury yield's dropping. And I mentioned this because Treasury yields did hit that 281 low. And if we are starting to uptrend here, I wrote earlier that I think financials and industrials could really begin to benefit. And you can see both of these seem to have put in lows, relative lows, and are starting to trend higher. This could be a theme in the last 4 months of the year. And so I'd keep an eye on both financials and industrials if the 10-year Treasury yield continues to rise.
All right. I would say it's time for our final segment now.
Yeah, what's on your watch list?
All right, let me share a few of them. I do throw some in at times, and then I go back and I weed out. And I went back, I hadn't looked at it honestly in a while, so I ended up weeding out quite a few of them that just didn't go the way I wanted to see them go. So I was adding a few extras in there from some of the previous shows we've watched and that I've been part of, and I added them to the list. So here I'm just going to go through as many as I can get through, but I want to leave you some time, Tom. So the first one is Andeaver, and I really like this one. I've had it on the list because I was waiting to see if we could get that breakout after the PMO had turned around here. So you can see that we did get the buy signal now on that PMO. We've got what could be a flag forming. I really like Andeaver right now. I'm going to put these on full quote. I know that people like to see that now and then, since we're not going through all of the... I want to be sure you can see where we're at. So this was obviously energy. So let's go to BlackBerry. And again, this was my Monday setup that I picked yesterday. Happy to report it's going the right direction. We got the breakout, which was the reason I had it on my Monday setup. We now have a PMO that's in positive territory. I think this one's going to still run higher. Remember, my upside target was right around 1150. So when we hit that, I will reevaluate. But for now, like I said, it's on my watch list. I haven't actually purchased it, but I'm really close. I'm really close to doing it because I do like the setup here. And you can see again the PMO doing well, OBV rising nicely. So watching BlackBerry closely. This one was really interesting when I went to come back and look at my list. This one is volatile, and I'm gonna annotate it just a bit here. Okay. All right, I don't know why that gets blurry and then not, so we'll just do it that way. All right, so we need a declining tops line, not a bottoms line here. So you can see if I'm not going to worry about that little one that's sticking out there. I'm going to take a peek at this declining tops trend line right about here. But you can see if you draw this as well, we've got what is called a broadening pattern. And typically you don't want to get involved in anything in a broadening pattern because it's just telling you that volatility is beginning to increase more and more and more. However, I still like this one. I still think this one's really interesting because when you look at the PMO starting to turn back up and look at the EMAs right now. They're even. The 20 and 50-day EMAs are now reading the same. And if I get that 20 to cross above that 50, we might have gotten ourselves a little bit of a bear trap, trapped a bunch of people in when you got the signals to the downside here. And now we're getting it turning right back up. We're getting the 20 and 50-day ready to turn the right direction. So I still like this one. I would keep it on the list. Let me get another line here, trend line. There we go. It's on a very steep rise though, so keep an eye on that, but it's a pretty nice little trend channel to the upside. So I think there's some movement to go here for $15. So I'll leave those in there. But yeah, I thought that one was really interesting because it's just now gotten above that 20 and 50 and we're getting ready to get that crossover. And we have a PMO that's turning up. So I thought that one's interesting. Devon Energy, I've found this one to be very interesting. It's been on my lists for a long time. It keeps coming up. It's moving mostly sideways though, and it's got some work to do. Again, you've got a 2050 that's just about, you've got the crossover to the upside on that 20, but it's having trouble holding on to that level of support. But we have the PMO, it is rising, and the OBV is rising. So this is why it's still on my watch list. I think you could make a case for a flag going on here. So, I'd be watching to see if we can get that move up toward the $44 range, or at least we're holding on intraday lows above that 20 and 50-day EMA. But I think that's on my list to watch. DVY, and I actually own this one in a buy and hold account. This bigger for you. It's been doing quite well since the decline, since the correction. It's pretty steady, and I think it's going to stay steady to the upside. Notice right here when it broke out above that all-time high, I believe, for the ETF. It's held it. It's come back down, it's pulled back, and it's holding that area. So it looks like to me we're getting a little bit of a flag going on here with this consolidation of that really big rally move. I am still going to be holding it. Yes, the PMO is starting to get a little bit weak, a little flaky here as it's trying to turn back down. But as far as my buy and hold, I'm perfectly happy with it, and I honestly would take it down here to 100. That would probably get me to consider stopping out on my intermediate term trade. But right now, I think overall we're looking at a pretty nice rise. All right, Micron, we did talk about Micron earlier. I do have the PMO buy signal now, but you made a great case to me anyway, Tom, regarding its relative chart. And I believe it's, yes, a little bit big here, but I think you made a great case when you look at all of these declining moves here that this is probably not the one to be in at this point. Let's go back here to my chart. But I do have the buy signal, and it's been in and out of my intermediate term account. I think that there are better places though, but I'm leaving it on my watch list for now. All right, Nike, this one's been on my list for quite a while, as you can see, because it's in that old format. Here we go. I think Nike still looks great. It made that breakout. It's been moving sideways. It's consolidating its move. I would watch for it to move higher because we do have a trending PMO to the upside. So I thought that one was interesting. And let's go real quick. NVIDIA, I've gotten that pullback now to the top here in June, I think NVIDIA looks really good right now. And having that pullback definitely makes this interesting to me. And look at this positive divergence that came in with the PMO rising bottoms and declining bottoms on price. We may have gotten a move out of that divergence, but we have a PMO, like I said, on the rise, higher than the previous high. I like it, and I think that if we can hold that 270 area, which it looks like we might just be able to do, this might be a good time to get into NVIDIA. And finally, the last one, SHW, Sherwin-Williams, got a breakout. I'm not happy with the PMO starting to decelerate right now, but if we can hold that 450 level, I think Sherwin-Williams looks very interesting. So those were on my watch list. What do we have on your watch list?
Okay, well, I have a few stocks, and I talked earlier a little bit about AMD and how I think that could be a reversing candle. So what I wanted to do first is just start with an example of something that was similar to what we saw with AMD, and this is Disney's chart. First of all, you can see back in July when we had this huge move to the upside, we had a couple of these stocks with a couple of these days with long tails, especially the one here with massive volume. I don't know, maybe 18 million shares. Long tail, and you see how we pulled back temporarily. We didn't go all the way back to the 20-day, but we did pull back off of that candle. And then finally, look at the volume again in the first week, into the first week of August. Had to move to the upside. Look at that reversing candle. That's a shooting star doji off of an uptrend, which is a reversing candle. And look how the volume just kind of came out of the stock. But Disney fell from 118 all the way back down to this 112 to 113 area, holding its 20-day moving average. And in my opinion, consolidating, I look for Disney to make another run for 117, 118. Then we pull up AMD. And so from a maybe a little bit more short-term bearish perspective, AMD's on my watch list simply because we've had this huge move up, massive volume, shooting star, not really a doji, but it is definitely a shooting star. And off of this with heavy volume, I expect to see a pullback similar to what we just saw with Disney. Now, maybe it's a little less, maybe it's just sideways, maybe it goes into a flag, but I think that this marked a short-term top. And as a result, that's why I would be a little, I don't know, skeptical of AMD at this point after the huge move. You can see RSI up in the 80s. That's generally not a great time to be jumping into a stock. It just shows that the stock's very overbought. And yet, I think a lot of folks get excited and they start telling people, oh, wow, you got to be in AMD. AMD's gone up so much. I'm making so much money. And people will just go in and buy because they don't follow technical analysis. And so I think we'll get a pullback and be able to get into AMD cheaper at some point down the road. Now, the rest of the stocks that I wanted to look at, first, I want to take a look at life insurance and aerospace. Life insurance is in that financial space. This is a group that should do very well if interest rates continue moving higher. And this is a group just waiting here for a breakout. I see an uptrend, inverse left shoulder, neckline, inverse head, neckline, inverse right shoulder, boom, trying to make the breakout. I think a break above 800 would be very bullish for life insurance, and especially if the treasury yields continue moving higher. And then the other one is aerospace. Aerospace tried to get up through 1680, moved back, did it again in late July. Look at that false breakout, pulled back, and now we're making another push. Aerospace is within the industrials that I think could potentially make a big breakout after many, many weeks and months of consolidation. If you look at the aerospace group, we had a great move up through January. Look at all this consolidation. A breakout above recent highs would be very bullish there. So that was the premise of starting my watch list. And let me just walk you through here the scooters, because I do like mid and small cap stocks still. I do believe the dollar goes higher. We'll see whether or not it does. It continues to move lower here of late. But if I go into, say, mid caps and I type in life insurance, Voya is one that will come up. All right, I'm going a little out of order, but that's okay. You still get the idea. If I pull up Voya, you can see all these tops. So life insurance is trying to get through 800. If it does, then I would expect Voya to break out. Watch for a move through 5150 here on increasing volume. Let me go into the small cap. If I simply just switch here, it'll hold on to my life insurance. It also has them ranked scooter. EHTH I thought was very interesting. And after a huge move up, look at that long tail. This is the type of consolidation that I'm kind of looking for with AMD as the 20-day continues to rise. test of the 20-day, I think EHTH would be very solid reward to risk trade. And then if I go down the list here, I think it was CNO. Look at CNO. Now, CNO is on the bottom in the scooter, but I actually like it more than the other charts. And the reason being, had a huge move up. Stock was trading at about 20 and a quarter, a little above, came out with earnings, broke to the upside, very strong candle. And notice the pullback held gap support in the 20-day moving average. I think we consolidate and eventually break out. So I'm looking for a breakout above that 22 and a quarter to 22.50 area here on CNO. The next move I would be looking at is aerospace. So let's pull up aerospace. And aerospace has WAIR. Pull this one up. This is another stock I like. Big breakout in early August with earnings. Pulls back. I think it's getting really close. I don't have this one on my strong earnings chart list. I actually went and looked. I think they beat on their top line, but their bottom line, they matched estimates. So automatically, I don't think that's a horrible thing, but it's just not on my strong earnings chart list. But technically, got a great reaction with heavy volume with earnings. I think a move back down to 12.30 or so would be good. And then the last one I have is in the mid-cap arena. And there's your HEI that I talked about earlier. Said that was one that I liked. Here was the earnings-related gap higher. They did beat top line, beat bottom line. I haven't yet put this one on my strong earnings chart list, but it will be on there when I update next. So let's go ahead and summarize the charts that we just went over. And then we will wrap up maybe with that final poll. Take a look quickly at the poll. It has seasonality slant to it. There are the stocks that Erin and I went through. A number of them. Tried to get through pretty quickly. But if we can pull that poll up for just one quick second, and I can explain it actually a little bit more tomorrow during the show. But the question is, why did Monster Scooter jump over 20 points today and more than any other large cap stock, since its price gain is minimal? And the number one answer here, its relative performance versus large caps is improving. No, that was not the answer. It has to be an error. No, that is not the answer. The answer is those who guessed the rate of change indicator jumped. I'm going to just take the screen very quickly, and I just want to show you the chart on MNST, and I'm going to add the rate of change indicator here. Let's see here. All right.
We don't see it yet.
Nope, I'm getting it. I had to get
it.
Okay. Okay, do you see it now?
Yep.
All right, here's Monster. Actually, I should put the scooter on here real quick, too. I'll just change. I don't need the PPO.
All right, you have 30 seconds.
Yeah, I'm going to do it. Okay, here's Monster. Here is the scooter jumping. Look at the rate of change. Big jump there. We'll talk about it more tomorrow. We are running out of time. But that is, I don't know, just a little teaching moment, I guess, for everyone out there.
Yes.
All right, well, let's go ahead and wrap up. There's the upcoming schedule. I do want to thank everybody for joining us today. Please remember to complete the survey. I'd love to hear what you thought of the seasonality today. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll see you back here tomorrow and Wednesday. Happy trading.